as a founder, you will at one point face the day where you have to sell your company, especially if you have raised funds from investors and you gave them equity. Every investor who has equity in your company will at one point want some returns. And it might be in 5 years, might be 7 years, might be even in 10 years. But at one point, you will have to sell your company. So, which options do you have? Would be always good to think about the exit scenarios, um, let's say in the beginning or as early as possible, to have some ideas. Okay, how can I prepare, I would say, the company in a way that it's attractive for my potential acquirer? So if you know that your company has the potential to have an IPO, which most founders hope to have at one point, um, you can, okay, of course, prepare your company for having IPO, but only if the metrics, the growth, and the revenue also are aligned with having an IPO. That means your company is attractive enough, big enough to have an IPO. It's less likely the case for most startups and ventures. The most likely, I would say, approach is to go through an M&A, merchant acquisition. Some bigger organization might buy out your company and buy out also the investors. And that's actually mostly the case for most companies. So if you are a founder, prepare your company for such a case, because this is the most likely case. Some people say, okay, why am I doing it? I want to go grow big. You can if you feel like your market is big enough. But if you feel like you reached a certain peak and you need always more capital, at one point it would make sense to sell it to a large organization, because the investors are not patient forever. They're patient for only for a certain limited time. So also for yourself as a founder, it would be interesting and also good to have some returns at one point. And you can start another venture. So you are free then to do something else. So these are the options that are most likely. Either you have an M&A or you go for an IPO. There are sometimes also options for investors and founders for later stage, or I would say scale ups, to go on a secondary market where you sell a portion of your shares to some potential investor who are interested in your venture, want to join, but they couldn't maybe join the regular rounds, and now you give them the option through the secondary market to join your company as well. So this is also an option, to sell a portion of your shares, not the whole company, not all your shares. Within even the merchant acquisition, there are also different ways of selling your company. If your company is doing very well, it's performing very well, then of course you can sell the whole company. But sometimes if the company is in difficult times financially, you can't raise the next funding round and you are tight somehow financially, you could go for either an asset sale. This is like a really bad thing. It means your company is not really making revenue, but what you have created is valuable for strategic buyer. Or for example, you can go for acqui-hire, which means that the company is not really buying the product you are building, but they're buying the talented team you have on board, because you maybe have very smart scientists, some engineers who are very hard to find on the market, and they want also that engineer, the strategic buyer. So you sell the company and they buy the company only for the team. And it can work, but it's most likely not an attractive deal for the investors. And also for you as a founder, most of the time, it's not very attractive, only if you are very small and you have a large equity in your company. So think about these options. There are many ways of how to exit. Very seldom, but it exists. There are, I would say, startups who grow so fast and become very quickly profitable, that they are able even to go and get a loan from a bank, a traditional loan, and pay back their investors with the profits and also the increase. So that can happen, but it's actually very seldom and very rare. If this is your company, I would say congratulations. That means you have built something awesome, very solid, very good company. But in this case, I would say don't expect it from the beginning as a founder. Expect that it will be most likely an M&A Or maybe if you're really doing very well, then maybe an IPO. It's the most likely case if you want to continue growing and not focus so much on profitability. I know in today's venture capital landscape, many of the VCs are looking for some profits to give them the confidence that this company will stay for the next few years, and because of the high interest rates, money has become tight, and that's why I think it makes sense that you optimize your company if possible for profitability. If you are still early stage, within the first 3 years of your company development, don't even think about it. You will not be profitable. Don't expect to be profitable. Grow as much as you can, of course, with responsibility in mind. Don't waste the money, and try to raise the next fund from investors. So I hope this was somehow helpful. You have got some ideas. If you have any questions, comments, please feel free to reach out. Happy to hear from you guys.